You want a loan, right? You probably want not only a loan, but you want an EIN only business loan. But the question is, are you in the right industry? Welcome back, folks, to another edition of the USM Studio Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you had to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about the EIN only business loan approval. And we have done research and we are going to present to you today the top 5 industries with the highest approval rates. Now, let me just say right off the bat that today's video is the culmination of 6 months of research, 285 reports that we have read. We have actually reconciled our own data, our own surveys with industry reports, and the data that we have reviewed actually started from 2011 all the way to 2020. So you have a whole decade of data that we looked at and our team looked at, and we are pretty confident that the results that we're going to share with you today are pretty solid. One thing I want to say here is that in preparing for this video, we actually perused data reports as diverse as the one from the Small Business Credit Survey 2021, the report on employer firms. You can see this on the screen. We also have the list, the link to that report. And this report is pretty solid and pretty thorough because it is actually, I would say, a collaboration with all the Federal Reserve banks of Atlanta, Boston, Chicago, Cleveland, Dallas, Kansas City, Minneapolis, New York, Philadelphia, Richmond, St. Louis, and San Francisco. So you have a team of economists at those Federal Reserve banks that got together to produce this report. So part of our reporting today is based on that. We also looked at the Base to Credit Small Business Lending Index report as of July 2021. This is a great thorough work. Also, it's basically a survey of 30,000 small business loan applications sorted by industry made during the past year. We also paid attention to reporting from Fundera by NerdWallet, a pretty solid reference also. And we also looked at the SBA, the Small Business Administration weekly lending reports. And as you know, SBA offers a variety of loan programs for very specific purposes, right? So this reports that we have looked at detail weekly lending activity for SBA loan programs. And so we're talking here about 7A, 504, and Community Advantage loans. We also paid attention to business employment dynamics. This is a solid report from the Bureau of Labor Statistics. This is part of the Labor Department, and great. And we're showing you right now on the screen. So the first, and we also looked at various databases in, for example, the National Private Sector Business Employment Dynamics data by major industry classification. And here you have a link. You have a constellation of links to charts and table for major industry sectors. Last but not the least, we also perused data coming from the SBA Office of Advocacy report on small business financing options. Okay, so we just put the sources out there. So those of you who are interested in digging a little further, you can go ahead and just read about it. And if you have nothing to do on a Saturday afternoon or Sunday afternoon, you can read those reports. Before I get into the actual rankings, let me just say that one thing we have actually found is that it's very important that as a startup or even as a very young company, you need cash. And what we found is that there are several things that can make, according to the reports that we read, according to our own research, there are several things that could make a company actually fail within the first 2 or 3 years. Okay, the two most common reasons for a small business failure are cash flow issues and starting off with too little money. So you can see that it's all about the cash. It's all about the moolah. It's all about the ka-ching, ka-ching, ka-ching. And especially if you are a startup or you are a very young company, you got to take care of liquidity and planning in the first 2 years. Okay, so we're showing you on the screen right now the latest SBA loan failure rates by industry. So you have an idea if you are in quote unquote a risky industry. You can see on the screen the dried and dehydrated food manufacturing, 10.87%. We have wine and distilled alcoholic beverage wholesalers, 11%, industry building construction, 12%, highway and street construction, 12%. So you can go all the way. Now, right now, according to the SBA, the shellfish fishing industry is the industry with the highest failure. So you have 75% of those industries, of those companies rather, they actually fail. Okay, and according to data from the Bureau of Labor Statistics, the rate of failure for small business enterprise is 20% in year one, 30% in year two, 50% in year five, and 70% in year 10. Okay, this is something you have to think about. So this is more or less the same across industries, even accounting for economic upsets that the one we had last year during COVID-19, the lockdown. I want to share another snapshot with you here, and the industry failure rate can vary depending on which data and which algorithm is being used, right? So according to an article published in Small Biz Trend, the present 5-year failure rate for companies by sector is, you can see on the screen. So we have mining, 51.3 failure rate, manufacturing 48.4 failure rate, services 47.6 failure rate, wholesaling and agriculture 47.4 failure rate, retailing 41.1. We have finance, insurance, and real estate 39.6, and construction 36.4. So you can see that in construction and finance, in insurance and real estate, we have lower failure rates compared to mining, for example. And those, again, are part of the economic journey that we all go through. So you have to account for economic upsets, all right? And so this is very important. So I just wanted to share this basic stats with you before we get into the conversation, so you have an idea of what we're talking about. Now let's get into the actual rankings. So we have the top 5 industries with the highest approval rates when it comes to the EIN only business loans. Number 5, folks, we have professional services. Our score, 8.5 over 10. So the approval rate in the 2011 to 2020 decade is 19%. So if you are in that industry, you have 19% chance of being approved. Our score, 8 over 10. So the average approval rate in the 2011-2020 decade was 38%, and the average loan amount, $195,000 to $150,000. So one thing you need to understand here is that when we talk about professional services, this is a broad term, right? But it actually encompasses a constellation of industries. So professional firms actually exist in many industries. So you have professions as diverse as lawyers, advertising professionals, social media influencers, yeah, architects, accountants, financial advisors, engineers, and consultants, among others. So basically, those professionals can be any person or organization that offers customized knowledge-based services to clients. And we also, of course, have lawyers, right? So the loan size, based on our research, varies from place to place, and that size depends mainly on the firm's location or the professional's location, operational history, leadership, profitability, and credit history. And one thing I also want to say here is that when it comes to professional services, we've seen a huge, I would say, a huge gap when you analyze the big markets: New York, LA, Houston, Chicago, versus the smaller markets. So those really have a bigger effect. But yes, from the decade in the 2011 to 2020 decade, 38%, and the average loan amount was $95,250. So if you are in that industry, if you are in the professional services industry, the best way for you is to actually have a solid business plan and make sure that you have a solid application, a loan application package, so that you can get the EIN only business loan that you get. Now, I'm not saying that this is just an average, right? The nearly $200,000 is the average. You might get lower or you might get higher, depending on a constellation of factors, including your personal credit and your business's credit when available. Okay, so this is one thing you have to understand. Now, one thing that's also very important is that you've got to incorporate. You cannot be a sole proprietorship if you want to qualify for an EIN only business loan. Okay, you got to incorporate. You have to be an LLC, an LP, and an S corp or C corp, whatever it is. Don't you don't be a sole proprietorship. Number four, folks, we have here information technology. So that's IT. So IT professionals also an hour score 8.5 over 10. So the average approval rate in the 2011-2020 decade, according to our research, is 43%. And the average loan amount, $216,790. Okay. And so when we talk about IT services, we are speaking about the whole gamut here. So we are talking about managed IT service, on-demand IT, network setup, network security, database management, cloud computing, software support, data storage, VoIP service, and computer repair. And based on the data we've seen that professionals in the cloud computing, database management, and network security they actually had higher chances of getting their loans, their business loans approved than other IT services. The whole IT ecosystem is pretty solid with 43% loan approval rate. But if you are in cloud computing, if you are doing database management and network security, you have a higher chance, particularly the cloud computing. So what is cloud computing? This includes any type of IT service that is delivered over the internet or a dedicated cloud network. So a cloud platform or SaaS offering will fall into this category. So essentially, you could create a type of software that is delivered to users over the cloud and then charge them a membership fee for the ability to access it. So what we have seen here is that EIN only business lenders in the last 10 years have actually they have grown pretty comfortable with that industry. They've seen the reports, they've seen the profitability reports. So lenders are actually So if you are in that space, you really will be you actually stand a higher chance to get approved. And another one is database management. So database is basically, for those who are newbies here, a database is basically the system that a business uses to monitor and access its data throughout the life cycle. Okay. And so this will include things like customer and employee information, for example, right? So when we talk about CRM, we talk about HRM or HRS, human resource systems. It also includes things like sales and finances. And database management includes organizing that data to ensure compliance, security, and performance of data-driven applications. So just FYI, if you want to get into that field. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Studio Kiwi Show. In today's conversation, I'm speaking to you about the top 5 industry with the highest EIN-only business loan approval rates. Number 3, folks, we have here retail trade. Our score, 9 over 10. The average approval rate in the 2011-2020 decade was 49%. And the average loan amount, $175,683, 175,683. And so when we talk about retail, it's a pretty comprehensive, I would say, term also, right? So you have grocery stores and supermarkets, you have general merchandise stores, you have specialty stores that sell one type of products, and you have non-store retailers. Also, when we speak about non-store retailers, we also encompass in that category online sellers. So if you are a seller on Amazon or Walmart Marketplace or Wish or Bonanza, to name a few, you stand a 49% chance of getting your loan approved unless you have some kind of issues in your credit at the business level or at the personal level. And one thing we have seen also is that lenders have grown accustomed to actually lending to local businesses. Now, a lot of folks have thought about the fact that with COVID-19, you will see some kind of sclerosis of the economy at the local level. But our research and the research of other experts has shown otherwise. We have seen some resilience, actually. So those firms, those retail trades, businesses, they've had a hiatus for 3 months, 6 months because of the lockdown. But as soon as things went back on track. They're just, I'm not going to say they're thriving, but they are pretty much solid, okay? And lenders have recognized that. So lenders are lending with no problem. If you are in that space or you're thinking about going into that space, this could be a good opportunity. So if you want to do retail trade of clothing or general merchandise or food, whatever it is, you can actually set up a kiosk. Okay, so retail goods can be sold through stores, kiosks, or even by mail or the internet. Okay, remember, and you have retail businesses can include grocery, drug, department, and convenience stores. And so this is something that you have to really think about. And service-related businesses such as beauty salons and rental places are also considered retail businesses. Number two, folks, we have here healthcare and social assistance. Our score 9.5 over 10. So the average approval rate in the 2011-2020 decade was 56%. The average loan amount $125,798. Okay, and so when we talk about, so this is healthcare is a pretty solid industry to be in right now. This is a very high approval rate if you're looking for an EIN only business loan. Okay, and one thing you need to understand is when we talk about healthcare and social assistance, we mean the whole gamut. So you have health and wellness offices, including offices of physicians, of mental health physicians, practitioners and specialists, of dentists, of chiropractors, of optometrists, of physical, occupational, and speech therapists, and audiologists, and offices of podiatrists. Okay. We also have health and wellness centers, including family planning centers, outpatient mental health and substance abuse centers, the SACs. We have HMO medical centers, kidney dialysis centers, freestanding ambulatory surgical and emergency centers. We have outpatient care centers, diagnostic imaging centers, home health care centers. So that's for health and wellness centers. You also have general medical and surgical hospitals, psychiatric and substance abuse hospitals, medical labs, ambulance services, blood and organ banks, residential health and social service facilities, including nursing care facilities, residential intellectual and developmental disability facilities, residential mental health and substance abuse facilities, assisted living facilities for the elderly. We also have continuing care retirement communities, and we also have social services, right? When we speak about social services, we talk about child and youth services, services for the elderly and persons with disabilities, community food services, temporary shelters, community housing services, emergency and relief services, vocational rehab services, and child daycare services. I'm actually listing all these services so you have an idea of where you can actually, if you have the skill set and you have the ambition and you have the time and you have the mission for it, you can actually start a business in any of those industries or sectors rather, because the approval rate for EIN only business loans is very high. Number one, folks, when we talk about the best of the best, the industry with the highest approval rate when it comes to EIN only business loans is restaurants and accommodation. Our score 10 over 10. So the average approval rate in the 2011-2020 decade was 63%. You heard it right. You heard that right. 63%. This is fantastic. The average loan amount here, $298,525, so nearly $300,000. Now, a lot of people are thinking, oh, that's surprising. Yeah, we were surprised too, but the data is there. Data is data. Okay, so despite COVID-19, restaurants and other food and accommodation businesses are inherently more risky than other types of businesses. That's true. However, we have seen that there were a strong lending atmosphere that led to high approval rate. I mean, surprisingly high. Okay, and one reason for this result is that many food businesses actually do not qualify for traditional bank loans, but they're able to get funding via non-bank lenders who charge higher interest rates but are willing to provide funding. And also, people have to eat, right? I mean, COVID or no COVID, you gotta eat. I mean, I gotta eat. So those restaurants actually were able to change their business model for a while and actually shift the paradigm by relying on services as diverse as DoorDash, for example. They were doing food delivery. You also saw the emergence, or if you will, the prominence of Uber Eats. So restaurants were able to reorganize their business processes to be able to serve clients without necessarily having a locale, okay, a location. So when we talk about restaurants and accommodation, we're talking about restaurants, fast food chains, retail and food stores, takeaways, business and industrial catering, leisure and outdoor catering, hotels, casinos, bars, and pubs. Okay, so when we talk about hotel and accommodation services, we're talking about lodging, suites, resorts. We have quick service establishments. We have a full service hotels. Okay, so those are things you need to think about. And of course, the loan amounts, your loan amount will depend on where you're located, right? Your personal credit history, your business's credit history, if applicable. Before closing here, I want to share with you another one. I want to give you a bonus. We actually have found a sixth sector that was pretty promising too, and that is personal services. And our score, 7.5 over 10. So the average approval rate in the 2011-2020 decade was 26%. And the average loan amount was $84,753. Okay, so this is this is just food for thoughts. I mean, obviously, you can see that when we speak about B2C versus B2B, the loan amount are low, right? So if you provide personal services by default and by definition, we're talking about B2C. We're talking about business to consumer. So the loan amount is low. And so when we talk about personal services, we mean everything from professional organizing service to personal shopper to house sitting to pet sitting to wedding planner. Okay, we're also talking about mobile beautician, event planning, hairstylist. Okay, we have doula services, professional makeup artist, and online travel agent. And based on the latest research, online travel agents have had a hard time in the last 12 months because, again, owing to COVID, but they're coming back on track. And in the list that I just gave you, this is not an exhaustive list. This is just, I'm trying to give you an idea of what we mean when we talk about personal services. And what I wanted to say is that in the list that I just gave you, of professions that I gave you, one profession that has been kicking ass, has been that has been thriving like really crazy, kicking ass in the last 12 months is mobile beautician. Okay, so basically, this personal service business idea is targeted at customers who want their nails and hair done in the comfort of their own home. And so basically, mobile beauticians had to go to people's houses, and owing to COVID-19, a lot of folks weren't really moving, and all salons and all beauty parlors were actually closed, right? So if you are a mobile beautician, you had to actually move, you had to drive to people's places, and they made a lot of money because they were actually charging extra because clients couldn't do anyway. They couldn't do anything else, right? They had to stay home anyway. So that was a great time. I think it's still a good time for them, but just wanted to mention that. So now, folks, decision time. This is the decision time. So you heard all the ratings. You heard the top 5. The question is, which industry do you have to start in? And should you start in a specific industry simply because it has a high loan approval rate? Those are fundamental questions that you need to address. If you're listening to me right now, I want you to start thinking about them. Let me repeat that so you really, this is important. Which industry should you start in? Think about it. And should you even start in a specific sector because it has a high loan approval rate? The jury is still out. Based on our research, we would say no. You don't have to start in a specific industry simply because it has a high loan approval rate. There is a constellation of factors that will actually lead to business success. So if you are in an industry that has a high loan approval rate, let's say, for example, a restaurant and accommodation, but you have no experience, you have no desire, you have no appetite, literally, for this kind of industry and no expertise, you're not going to succeed. You might get a $1 million loan, right? but you can't actually put that cash to work because you have no idea how the industry works, or you have no passion for it. So everything has to start with your skills. So you want to focus on your skills, experience, and most important, passion. You got to have passion for this. You can't just, in everything, in anything, you got to have passion. Don't sit around trying to do something simply because others are doing it. I mean, they might be doing it, but you have no idea what's going on in their lives, what or how long it took them to get to where they are, right? You're just thinking, hey, I think I can do this too because she's been doing it. I mean, she ain't that smart. She ain't smarter than me, or that kind of thoughts. I mean, this is not really what. So you want to focus on your skills, experience, and passion. And the second thing you want to do is you have to think about your personal life. You need to balance work and life. You need to have this work-life balance. It's very important because a business is not a short-term affair, especially if you want to succeed. It takes time. And the third thing you want to do is you need to test the idea before you launch. Okay, so if you love restaurants and accommodation or retail trade, that's cool, fantastic. Go ahead and start your business. But before you roll out the whole plan, the whole business plan, you want to test out the idea. You want to start small. You want to do some trials and errors. That way, any loss, any failure wouldn't be a big one, right? Those are small ones that you can actually just get up, dust yourself off, and then just move on. All right, folks, this was it for today's conversation. I was talking to you about the top 5 industries with the highest EIN only business loan approval rates. And just to recap here, number 1, we have restaurants and accommodation, 10 over 10. Number 2, we have healthcare and social assistance, 9.5 over 10. Number 3, we have retail trade, 9 over 10. Number 4, we have information technology, IT, 8.5 over 10. Number 5, we have professional services, 8 over 10. And the extra is personal services, 7.5 over 10. Thank you so much for your attention, folks. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.